you? Hope you're doing well. All right, so today is last trading day of the week, and we're going into probably a military response and campaign by the U.S. Iran. So there's going to be a lot of trepidation on the part of deep pockets. And I want to talk a little bit about this. I'm going to try to keep it brief because I don't know exactly how long X will allow me to make a video before it denies it, because I've done it in the past a few times. And unfortunately, the whole video won't upload. So it's very frustrating. So the high here and the low that I'm noting, this is basically the range that daily is kind of like being held in. And I believe that any movement outside of this range will be a direct response to the Middle East. Okay, so with that said, I want to show you what we just did yesterday. Well, not yesterday, but today. The sell side below here, they wicked down into that. And now we're back essentially near the middle of the range between that high and that low. The critical points of interest for me is if you look at this wick right here, right there, okay? If we start to move above and we get above today's opening price, which I'm not stating as of right now that it should or will, waiting for the opening bell at 9:30 today. If we use the fib and measure the high down to the low, 22,029.75. Okay, great. There, the midpoint. That level all I'm interested in seeing is the midpoint, so I'll leave it like that. Just want to make sure it can be seen on all intervals. And we dropped down into new week opening gap, traded down through it, and then took out again the sell side below, this low, and this low here. If you look at the general profile of candlesticks moving higher or lower and how the damage was done, the market has displayed jaggedness, as I've been teaching last year and this year, how to look at where the market was made jagged and where it's smooth. And by contrast, you can see how I apologize, I'm fighting seasonal allergies, so it's going to be a little irritating probably hearing that crap, but I can't edit it out, so it is what it is. This run up here, this run up here, and this run up here, all of that has been made jagged. So everything above 21,800, all that rally up in there, it's tried to reach higher. It's tried to reach higher. It's reached into our very specific key levels on the daily chart. And for those that are not aware what some of them are, specifically, it was this and this. Both sell side imbalance, buy side efficiency. Note that it only wicked up into this one. It has been operating mostly inside of that one, which was the key sell side imbalance, buy side efficiency I've been discussing predominantly over the last few months. So what am I getting at here? Because I'm probably going to need another video to continue with this one and make sure that you guys get it. This is the daily range that we're inside of, and it's Friday. We're going into the weekend. There's not a lot of new risk, I don't believe, that's going to open up today. So you have to incorporate the range that's available to us. Worst case scenario, okay, in terms of market stability, is that the market unravels and trades back all the way over top of this range and then attacks that low for the sell side. The range from the open of the daily candle and that consequent encouragement right there, inside that pocket of price action, any bullishness, that's how I think it's going to be limited to. Now, that's my pre-market, before the opening bell, before whatever's going to happen today is going to happen. That is just an idea where I want to focus on. I'm not bullish to the degree where it's going to go up and attack that high or go here. Okay, so I'm thinking that we're going to be predominantly limited to that level and inside the new week opening gap. So it could trade back down into that, and the range which should be defined by the wick on this candle's consequent encouragement, and inside of the new week opening gap around consequent encouragement of the new week opening gap. So